think whilst we might have a different view from a short-term perspective, we probably have a very similar view from a long-term perspective in that global equity markets, after 13 years of treading sideways, are looking a lot more closer to fair value and with long-term potential than at any point in the last 10 or 15 years. So I think we probably both agree on that. I think it's more of this transition period from the deflationary cycle through to the reflation as to how this transition occurs. And from our perspective, we are at neutral equity weightings just simply because we're not sure whether there's going to be another major bout of volatility or a correction at this point. We will manage our way through that rather than waiting for another major correction to use as the buying opportunity.
I think that's right. I think that's the key point. I mean, we've been in a deflationary and disinflationary cycle, as Scott said, for over a decade now.
Right.
And the question is, how close are we to coming out of that? We both agree, we've been through that process. We both agree that at some point the markets will come out of it. And the real question, I suppose, is, are we almost there? In which case,
right.
perhaps we should have a more positive view. Or is there still some very difficult times to come? In which case, maybe we need to be a little bit more cautious. So it's just, how bad is that transition going to be? How bad is the volatility? How much might markets go down? And also, how long might that period be as well? And I think that it's almost impossible for anybody really to make a call. And I've got my opinion, Scott's got his opinion, but I think, again, one thing that we both agree on is, actually, either of us could be wrong, the other one could be right. We could be almost there, or we could have quite a bit more to go through. And I think, the really difficult thing for investors is, if you know that, then how do you position yourself? And I think long-term investors have really perhaps got to take a view that maybe they can't afford to miss out on it. Even if I'm right and there's some pain to be taken, maybe they can't afford to miss out on the upside. And I think perhaps either shorter term or more cautious investors need to be aware of the risks that, maybe I am right and maybe we have got some pretty ugly drawdowns to come in equity markets.
What could be the key factors or the key triggers point of the equity markets?
I think that if you look at the US economy in particular, I mean, most economic data over the last 6 to 12 months is progressively getting a lot better. From jobs data to housing data to non-farm payrolls data to purchasing manager, the inflation is not a problem. And so actually, vehicle sales are on the rise again, consumer confidence is reasonably positive. So actually, the US economy particularly is looking pretty solid at this point in time.
Is that because of the Fed's stimulus package that is pulling out now?
It's a cumulative effect over the last 5 years since the crisis. Is that things have bounced back as company earnings has GDP growth and a number of other things. So I think that's reasonably robust at this particular point in time. Europe perhaps has got much more concerns in that the European Union has still not gelled and a lot of political risk still attached to that. And also the banking system has not cleansed a lot of the the bad loans and all those sorts of processes which the American banks have done a lot more of. So from our perspective, the risks are more likely in the European scenario at this point in time.
What's going to happen if Fed is tapering the QE and what we have seen on the key figures, just like the PMI, the GDP growth, and also the unemployment rate or something? Is it going to change the whole picture that we've seen?
I think that the unemployment data and all those economic points will carry on. They have got a trend of their own, developing. Tapering. They stop buying 85 billion, do they buy 75 billion? A lot of that is very short-term Twitter news. It's like, well, where's things going to bounce around on a daily basis? The reality is that the US economy is improving. Interest rates need to normalise. 10-year interest rates have already moved from 1.7% to 3% this morning. So, the interest rates are a lot more normal. Equity markets have, been treading water a little bit. Emerging markets have taken a lot of pressure, but that's more about liquidity flows and money, leaving emerging markets and going back into a US dollar environment. So the US needs to it's done a fantastic job of providing the stimulus and quantitative easing as it was when required. removing that punch bowl is a positive thing for companies and the economy in the long run. It means that things have recovered.
I think the key point is whether you really believe what the data points are suggesting, whether you take them at face value, or whether you think that's a misleading story. And I suppose our worry would be, if you look back in history, 1936, 1937, it seemed like the States was coming out of the Great Depression. So because they were worried about creating a really unbalanced economy and worrying about the amount of debt that they were building up, they decided to do something very, very similar to tapering. So they eased back on the stimulus, and we then had an even worse recession in 1937 than almost as bad as we'd seen in the early 30s. So I think our worry would be, are we at a sort of 1937 situation again? Is it that the data looks good, but it only looks good because of the stimulus that's flowed through there, and therefore the minute we take the stimulus away, we're heading back into another huge recession. Even if we're just easing up on it, even if we're just going from 85 to 75, all the current data points are predicated on 85 billion a month going in there. The minute we start to play around with that, then in Warren Buffett's phrase, we will find out who's been swimming naked when the tide goes out. We really find out what's going on underneath the American economy at that stage. And I think until we try that, nobody really knows.